It's about that time of day again here, boys and girls. Newsletter time. JJ here. February 9th, 2015, in tonight's nightly newsletter. I'll tell you that crude oil's looking mighty bullish. We got some pretty big clues saying this thing's probably going to keep going higher. Gold took a nosedive last Friday after non-farm payrolls. Continued a little bit this morning before retracing. We nailed that gold last week. And Russell is finally coming off those highs, and we are a bear on that Russell. But before we begin here this evening with our nightly newsletter, I do want to remind you, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. There are 3 reasons why you should follow the link below the video if you're watching it on our YouTube page right now, or if you're on our blog, you're already where you need to be. First of all, you can download all of my charts. All my charts I'm going to go over here with you guys tonight. You can download those by following that link below. Upper left-hand corner, you can grab yourself a free pass to come out and attend my live trade room as a guest. If you're not a member of School of Trade and you're curious what it feels like to be in our trade room, how we use these levels in our trade room, and what we're all about here at School of Trade, grab that free pass. And of course, last but not least, there was 3 things. There's a nightly newsletter mailing list. Give me your name and your email address, and I will send you an email every evening when this nightly newsletter is posted. That way you never have to worry about missing another newsletter ever again. All right, guys? We got a busy schedule here. Busy newsletter for you guys today on what we call Reaction Monday, the Monday after non-farm payrolls. Don't forget, download the charts, grab your free pass, join the list for the newsletter list. And if you join the newsletter list or you grab your free pass, just remember, I'm going to send you a verification email to make sure that I get the right email address and to make sure you're not a robot. All righty? February 9th. 2015, boy, we are cruising through the month of February. Guys, don't forget, you know what Friday is, right? Please tell me you know what Friday is. Okay, I'm not going to tell you what it is. If you don't know what Friday is, you better go do some research. You've got some homework here. Okay, you don't want to be digging to the bargain basement at the old drugstore on Friday morning. You know who you are. And I know this because I'm guilty as charged as well. All right. I want to make sure we remind all you poor souls out there of what this weekend is. Let's jump into this mighty Russell. Russell's looking pretty bearish. Now remember, last week we were expecting to get a reversal off of this high, right? Remember that last week? We were thinking we'd go up and down. We pushed through it a little bit after last Friday's extremely strong jobs report, right? Very strong jobs report on Friday. And here we are now, just about up to those range highs. We go up, right, and we're most likely here coming down here now off of those highs, right? So the sugar rush, little sugar high this Russell's been on the past couple days is quickly wearing off here. So we're coming off range highs. We're selling short. Basically, the way I see this right now is you've got some easy selling opportunities down to this 81.1 area, this 1180 area, we'll say, and then we'll look at it again from there. So I would definitely be expecting a move lower before we go higher, okay? And again, with last Friday's non-farm payroll report being so strong, this is a little bit of surprise that we stopped this short, right? Honestly, I would have thought we would have been pushing to that 1219.9 by now. So I do expect us to give it one more shot. When it happens, we do not know. Now, looking at the bottom of this chart right now, very big clue down at the bottom, volume does not confirm it. Okay, so this is a really big clue, right? So you line up your highs, we get higher highs in price, barely getting a little bit push higher in the volume. So not a lot of volume confirmation. This tells me I'm a bull long term, but not in the short term right now on that mini Russell. Hiccups here. Now, speaking of volume confirmation. Now, remember, guys, I don't do much with order flow. I don't do much with volume profiling. I really don't believe that you need it. In my opinion, the most effective way to trade the markets is to take a crowd psychology, right? The masses, the wisdom of crowds, the self-fulfilling prophecy. It's easier. When you do order flow and you do volume analysis, you're trying to understand each individual person that makes up the crowd, and you're going to go cuckoo trying to do that, right? So I do a little bit of volume, but don't confuse what I do with volume with all the complicated junk you see on YouTube these days, where everyone's using these complicated volume tools, all right? I'll keep preaching that to you because it's definitely something I'm a very big believer in. Speaking of volume, though, look at this volume confirmation. Now we have what we need, right? Looking good here. Volume clearly confirms this move lower, right? Remember, we didn't get the confirmation at the highs. What we did get, though, was the confirmation as we go lower, volume is rising. It certainly ain't bullish, I'll tell you that much. So we have Russell clearly bearish. We see lower lows, lower highs, volume confirmation. So we focus on selling short. Relatively easy chart here. You'll notice we got some trend lines overhead, project those over. I'll tell you right now what I don't want to do right now is sell right now. I don't want to sell right now. Definitely do not want to sell right now at the low of this channel. And really, for the most part, I would expect this price to try to go back inside that range before it comes tumbling down. So let's play the whole game. What if price goes higher? What if price goes lower? What if price goes sideways? Okay, I always like to play those scenarios around before I take my first trade each day. So let's take a look at what if price goes higher. If price goes higher, we have it easy, right? Sell the 96.6, sell the 1200. Big round number, guys. Big round number, 1200, right? Sell the 1203. I don't think we go to 1203, but who knows? So if we go higher, stay patient, wait for turnaround, and get to the shorten. What if we go lower? Well, if we go lower, the hard part right now is if we go lower, you really don't want to sell right now. If we go lower, you're going to get this A, B, C, D. Check it out. A to B, C to D, right? I mean, this is very, very common stuff. This is not complicated. But bottom line is, if we go lower, I really have a hard time selling short until I get a retracement, right? I don't like selling the lows. So I would highly encourage, again, selling short right now. You know, it may just roll over and play dead, right? And you might get lucky, but you know, you're not going to get lucky more than a couple times a month, right? And the rest of the time, you're going to lose all your confidence, and you're going to basically be broke of money and confidence, so you won't be able to get lucky next time. So wait for it to come up and then short it back down, all right? So if it goes lower, you got to really wait. If it goes lower, wait for it to come off those lows and then sell it. What if it goes sideways? If we go sideways here, I'm going to find the range. I'm going to go trap. I'm going to go fade, right? If we go sideways, breakout retrace, breakout fade. If you're a member of mine, you know exactly what I'm referring to. All right, guys? So be prepared for tomorrow. I got downside targets here. Target, target, target. Take this range, project it down. There's your range expansion target. There's your swing low target. Easy peasy. Easy as falling off a horse. All right, guys, looking short here on the Russell right now. Pay close attention to that upside. Don't force it. Boy, remember this chart from last week? This was a beauty. Remember this one from last week? Right, we didn't know about this, but what we did know was that we had broken that channel. We saw this trading range. Remember this? This is clutch. Projected that up. We said, all right, here's your buyer's target, and look what happened after Friday's non-farm payroll. Coincidence? No. That's what I'm talking about when I say the wisdom of crowds, right? The self-fulfilling prophecy, the crowd psychology. That's what I'm talking about. I don't need to know why. I don't, right? Yeah, it'd be nice to know exactly why. I could probably impress you guys a little bit, but it doesn't put my money in my account. It doesn't. When I go cash that check at the end of the week, right, from my trade account, the guy at the bank doesn't say, oh, did you read the order flow? No, right? He goes, cool, good job. Way to make your 25 grand this week, right? Okay, so trading range, range expansion, that's where we got that resistance level over the top. And of course, now we just roll over now and start pushing lower. So keep selling short at resistance levels overhead. Take that profit at the measured move target. A to B, C to D. Right, there's your measured move target, 1190.4. You've got the range target, 1183.3. And again, you can see this is a tough spot. I just can't be a seller here. I don't like selling at the lows. I'd rather have it go up and then come right back down, and I'll sell it at these highs. We definitely see more clues, though. Buyer weakness, right? They couldn't even retest the high of that channel. Seller strength, I mean, they are literally grinding down that low of that channel, right? So definitely strength to the downside, definitely a bit of short-term weakness to the upside. That obviously can change here overnight, but this does not look bullish. Looks mighty bearish. So keep on selling there on that Russell. Don't forget, you can download all these charts. And come on, see me tomorrow. I'll walk you guys right through all this in real time. Remember, you don't have to do this all on your own, guys. Okay, let's keep going. Let's keep going here. Moving forward from the Russell to the mighty, or should I say, to the funny yellow metal. So we had our way with gold last week. We've had our way with gold for quite a while now. It's been a great 6-8 months here on gold. We got exactly what we wanted from last week. Okay, if you remember from last week, we had this trading range over here. Remember this trading range? Yeah. Remember how we said, look, whoops-a-daisy, we're going to go back into that range? I don't think that's luck, guys. I don't think that's luck. This is another example of why I don't use volume profiling. See, a lot of volume profilers, what they'll do is they'll say, but look, Joe, there's all this volume over here, right? You got to look at the volume profiling. And I go, okay, why not just look for a consolidation? Wouldn't that also be where all the volume piles up too? Yeah, it is, right? So before you go spending all that money on those volume tools, right, where they go, well, you got to see where the volume is. I can probably guess where the volume is. Flat moving averages, overlapping candles. I don't need that complicated order flow, right? There's some good examples of things. You don't need all these complicated tools. You just need to know what you're doing. That's all. That's all. All right, guys, so definitely come out and see me. I'll teach you guys all about why I don't think order flow is necessary. And I'll also talk more about how we can simply use other techniques that don't require all this complicated junk while staying focused on embracing the wisdom of crowds, right? I'm not trying to understand every single order. I don't need to. Because when you put all the orders together, they have a pattern. See? It's much easier that way. I know. It's amazing. Keep it simple. You'll do a lot more with less. All right, let's keep cranking. Moving forward here, we got our bearish move from last week. Kind of follow the bouncing ball here right now. We got this bearish channel. Okay, lower lows, lower highs, easy peasy. Then we got the ABCD. Right, so we're down around this measured move right now. Whatever you do, do not sell this right now. Well, you can do whatever you want, but if you like the money in your account, okay, not in somebody like my account, right? Because I'll take that money from you all day long if you want to sell there all day long, right? Because that's what professionals are buying right now. That's where they're taking their profit. If you're selling down at these lows, you've already missed this move, okay? Don't take it personally. And remember, don't worry so much because trading opportunities are like buses. Stick around. You'll see another one coming in a few minutes. And we're probably going to get one more here. You got that resistance level overhead, 52.1. You've got the top of that channel. You've got the trigger zones, right, overhead. So really right now, I mean, if you look at this on gold, you could definitely see some short-term buying opportunities. Just remember, though, if you're a buyer on this gold, you are going counter-trend. I do not encourage counter-trend trading. Okay, but you probably will get some short-term buys on the way up. I would look for an ABCD, right? Something like that on the way up before it comes tumbling back down, or as we say in the biz, a two-legged retrace, right? Two-legged retrace. Don't you love that word, legged? Yeah, what a great word. Gotta love English. All right, let's keep going. So we know we're looking to sell short. You might get some short-term buys on the way up. I am going to wait for that price to go up, though, before I keep selling it here. So I'm looking around here to get my shorts going here. And then you got some targets waiting for you. You got a range expansion target, right? You get an ABCD expansion target, okay? Don't say I didn't warn you. Take this range right here, right? Flattening moving average. Copy it, paste it, run it down. That's where you get your range support, okay? So that's why we have that target down there at 12.19. Okay, so use those targets as targets, use those red boxes and the red lines as resistance, and of course, you get a reversal line there. Don't forget, you get a reversal line here. What was support becomes resistance, and we'll look for that price to go down from there as well. Stay patient on that gold right now. That gold's going to require a little bit of patience. It'll be a good test of some patience here to see if you're paying attention next tomorrow. Let's keep going. 16th here on gold. Now, this one doesn't look so bad, right? Doesn't look like we need to wait that long. This really would be too easy. Now, here's what I see right now. Okay, here's what I see. And I put this in the download. If you zoom all the way out on this, you can kind of see where I'm getting, and you really could go in and draw this a little bit wider too. But, you get all this resistance overhead. So I'm really trying to get in short at the highest price, right? You make the most amount of money when you sell. So it's kind of a balancing act right now. I want to stay patient because I want to get short at a higher price. But you can see, though, we've really got to stay patient until we get to that trend line again, right? We really got a ways to go here. So what I'm going to do is I'll be looking for those selling opportunities. I'll be taking nibbles here, and nibbles here. Here's something else I want you to think about, too. Here we have a short-term bull channel. And what do you see here? I see a break of that channel and a failure to retest that high. Okay, now, I'm not the smartest guy in the world, but I do know one thing's for sure. When we channel and break, we're probably going to go retest that high again, and we didn't. So we're looking now most likely here for price to come down to that 1231.5. We are overnight right now, and there's still going to be a little bit of blow off from last Friday's non-farm payroll. So just be careful right now. Look for that sell short here, right here. Personally, though, I think this is just too easy. This is one of those scenarios where I go, no way. You're not going to make it that easy on me. I can just sell right now and just take my money down here. It just doesn't happen that easily very often. So what I would expect to happen is one more try to go higher, get up into these areas overhead, and that's where I'm going to start looking for that really nice sell. So if it goes higher from here, just completely disregard this area here and go after the 47s to 51 areas up top. If it goes sideways here right now, breakout, trap, breakout, pullback, okay, because we're going higher. So we're going higher. If we go sideways, then you got breakout, trap, breakout, pullback as we go up to that trend line. If we go lower, okay, like I said, if we go lower, you got to act fast because you don't want to sell into that 31, right? So if we go lower, you better get on it quick because you're going to run right into that 31.5, and then we get another target down here, hold that runner down to that 18.1. Okay, so again, stay bearish right now on that gold, but don't forget, there's going to be a little bit of a retrace off these lows here. So again, like I said before, it will be just too easy for it to just roll over and play dead now. I don't think that's going to happen. It most likely won't, right? We'll probably get that push higher here, get those buyers just chugging the Kool-Aid before they run out of gas and we sell this sucker short. Let's wrap up here on the gold with our price action chart. This chart takes a little bit of zooming out here. This is a good example of a chart you're going to want to download from me below the video tonight because this one's a big one. If you zoom all the way out on this, okay, actually this isn't that bad. You can see what I'm talking about, right? Okay. Let's leave it just like that. Okay, so now you can see on this, again, this is the gold price action, only one indicator on this chart. We make money every day of the week in our trade room with only one indicator on our charts. See, you don't have to overcomplicate this stuff, guys. It's not rocket science, it's day trading. Okay, so I got my channel down, got a midline, right? Kind of interesting little spot there, right? A little midline there. Look where we are right now. We get a bearish long-term channel. We're right on that midline right now. So this is where we could definitely collapse here. I just don't think it's going to make it that easy on us. Right? Now, midlines are lower percentage levels of resistance, right? But we're going into that midline, and we're definitely struggling. We're definitely struggling. Now I want to zoom in on this area here. Well, hold on one second. If we get up to the high of this channel, you know what I'm looking for there, right? Sell, 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 sell. Sell those highs of this bear channel, right? So draw down that trend line, and you're selling that high right back down again. Okay, and what we would expect to have happen is for us to make a two-legged move before we get down, right? Before we get lower off those highs. Okay, let's zoom in on the closer chart here. Let's zoom in a little bit closer here because I want to show you what is going to trigger the bullish move here. Okay, we did this last week on crude oil and it worked out absolutely flawlessly. Let's take a look. As we zoom in here right now, we see a lot of clues here. The first one I see here is this trading range. Okay, this trading range, just remember, range low, range high, range low, range high. Don't mess with those trading range lows, okay, when you're selling. So if we go lower here, do not sell into that range low. Also look to sell at that range high, but here's what I'm thinking. We have this bullish channel here. Okay, again, like I said before, we hadn't tested the high yet, right? We got the first try here, but they appear to have failed. I don't think it's going to be that easy. The reason why I've got 1243.6 marked on this chart is because that's my line in the sand. If we didn't get there, did we? Yeah, I got 43.3. I do not see us retesting that high. So in my opinion, we are going to try to get to that 43.63. If we get to the 43.63, nothing's guaranteed in this life, but it's almost guaranteed we get up to that 12 to 2.7. Call it profit taking, call it bullishness, whatever the heck you want to call it, doesn't matter to me. But if we push here overnight, basically if we go to 43.6 before we break below 36.3, if we go higher before we go lower, we're definitely going to see that 12 to 2.7. Okay, so be alert, be ready for it. Another thing, though, is that if we don't go retest this high, if we don't get back to that 1243.6, guess what? We're going right back to those lows again, 1230.2, and we've got target, target, target on the way down. Whatever you do, though, don't sell into that low. Okay, don't sell into that low. It's going to be breakout, retrace on the way down. Okay, guys? Don't forget, download the charts here today for gold so you can get that big channel and you can have that marked up on your charts. Very interesting what's going to happen here overnight. In the next few hours, we're probably going to get everything that we need to trade the entire session tomorrow on gold. Okay, if you don't know what I'm talking about, come join as a member and you will get the training you need, guys. How about that crude? How about that crude? Let's go from the crazy yellow metal to the black gold, right? The Texas Tea, the crude oil futures. Now, we kind of joked around about this last week, and I said, you know, if there's a heaven for day traders, right, it's filled with megaphone patterns, right? Okay, it's a great pattern. It's a very rare pattern. Usually you get the opposite, right? Usually you get this. Usually you get the wedge or the triangle, right? See how they're different? They're the exact opposite. And of course, the reason why it's called a megaphone is, you know, can't you see the little JJ here with his, right? See the megaphone? Okay, so it's inverted wedge, inverted triangle, negative triangle, megaphone, you name it. You name how you want to call it, potato, potato. It's a megaphone pattern. Higher highs, lower lows. Okay, the key is this right now. The reason why I have this chart up here right now is because we're going to expect price to keep going higher here, hit the high of that megaphone, and then I was just talking to John Henry in the office this afternoon about this. I said, it feels like right now, it feels like we are bouncing off support and grinding through resistance. And what that means is it feels like there's some emotions in play right now, doesn't it? You know, maybe it's just me. Maybe I'm a little bit blinded here by it. But it feels like there's a little bit of an emotional kick to the buy side right now. Now, remember, professionals don't trade with emotions. Who trades with emotions? You know who trades with emotions. That guy at the gym, right, who's sitting on the treadmill, you know, trading off his cell phone. Yeah, that guy's trading with emotions. You know who's trading with emotions, right? The guys who call in on CNBC to talk to Kramer. Those are the people who trade with emotions. Professionals don't. So we felt the emotional kind of kick over the past few days. You know what I'm talking about. Think about it, right? It's been a little bit bouncy at those support levels. That tells me there's a lot of mom and pops right now that are buying crude because they're gamblers. Price can't keep going any much lower, can it? Oh, yes, it can. So right now, this megaphone is really kind of proving to us exactly what we were thinking earlier. It really is. In my opinion, this megaphone pattern is just playing right into what I'm seeing in the price action right now. So I would expect this to go a little bit higher. I really would. We're going to see some clues in a moment where you're going to see why that looks pretty strong. But guys, I just have a gut feeling we're going to get enough rope to the buy side here to hang yourselves. So don't go mortgaging the home just yet to go buying crude just yet. All right, because the way it feels right now, we're playing right into the hands of the big sellers. Okay, every professional trader out there is going, come on, mom and pop, come on, grandma and grandpa, get this thing up here to 56. Let's do 60, because I can't wait to sell the heck out of this thing and take it all back to 40. Okay, my gut tells me that's what happens, but who knows, right? My kind of looking at this, I say, all right, well, we get an A, B, C, D. Again, it would make perfect sense. It would make absolutely perfect sense for this to go right back up, dance around 58 to 60, and then see ya, suckers. We take this all the way back to 40s because nothing's changed, right? We just saw the biggest inventory build ever last week. Ever, with an E, ever, okay? So there's no reason for this price to be going higher. Last time I checked, Europe's still screwed. China still has a horrible economy right now. They are really struggling around the world. The U.S. ain't doing so great either, but the U.S. jobs report last Friday is not going to be enough. It's not going to solve the problem of all this crude lying around everywhere. Okay, so that's why I keep saying this feels like enough rope to hang yourself at these highs, and the megaphone is just a cherry on top. The megaphone is just a cherry on top. So A, B, C, D, and then all the way back down. Okay, let's see what the chart tells us, though. That's what I think's going to happen. But, guys, don't trust my opinion. Trust the chart. You shouldn't trust anyone's opinion, okay, whether it's me or anybody else. Okay, trust what the chart tells you. So right now, crude oil is very bullish. We're on the way to 54.20 and possibly $58 a barrel all the way up for that measured move. Okay, so you get your measured move all the way up. That puts me right about 58, give or take a few cents. We got the 54.20. That's the range high from last week. We're focused on buying pullbacks at support right now, but here's a really big clue. That's a spike in channel right there. Now, does anybody remember what happens with the spike in channel? Well, let's go over real quick. On a spike in channel, what happens is when you see it channeling, you're buying the low, right? So every time it pulls back, you're buying the low, buying the low, buying the low. But if the time comes when we start undershooting the highs, in other words, here's what you're looking for. What you're looking for right now is you're looking for the time when we start undershooting those highs, right? Buyer weakness. Then once we get a lower low here, it goes all the way back to the beginning. Basically, it goes all the way back to the spike. So spiking channels are really fun to watch. They're a little bit difficult to trade because you've got to see them. You usually don't think of a spiking channel until you've missed it, unfortunately. So right now, we're going to keep buying those dips, but I'm going to be keeping a close eye on these highs because the minute we fail at these highs, that's going to be the blood in the water. Then you see a lower low, and whoops-a-daisy, we go all the way back to that spike. Okay, so here we are now. There's my channel lows. There's my channel highs, which just happens to be a midline of this bigger channel. But pay close attention right here. Tomorrow, if we see us go up, but we fail to hit those highs again, right? If we see weakness at the highs, guess what? See ya. It's going to go all the way back down to where the spiking channel began. Okay? It may flutter around a little bit, but once you start seeing those lower lows, so how will you trade that? Well, what I would do is wait for the break of that low. Don't sell that. Remember, we don't sell the lows. And then wait for the retrace and then sell it at the reversal line. Okay? Don't sell at the lows. Wait for it to break those lows, retrace off those lows, and then sell it short on the way back down. But remember, this is after we break. So you're nibbling here at the downside. You're nibbling here at the downside buying. we get a spike in channel break, target, target, target. You can look for a buy here, all right? You can look for a buy there. I will look for a buy there. I'm telling you right now, I will look to see if we can get a chance to buy this thing. Because, these spiking channels, they're relatively rare. They're not going to always work like that, right? But I would definitely expect, though, there to be some buyers here. So we'll definitely take a nibble there. And what I mean by that is we'll look for the reversal. We'll look for the entry pattern long. We'll look for a nice strong trigger, right, to buy that 50 area. But, in my experience, usually what happens is the minute the spiking channel breaks down, we usually go right to where the spike began. So just be aware of that, guys, here on the crude. Look at the 16 here on crude, wrapping things up here with the anchor charts here. You can see pretty much the same stuff we talked about before. Okay, we've got target, target, target overhead for all you bulls out there. I think the bull side is the right side to be on right now. I explained to you why I say that. But, here we go. Look at this, though. Look at this. This is, again, that use of volume here. I don't use it very much, but when I'm trying to analyze the highs and the lows, yeah, right? So I'll tell you, these bulls don't look that bullish. They look a bit tired out. They look a little bit tuckered out here. So barely any strength to the buy side right now. So again, I would expect this to go up one more time tomorrow. Be looking for that failure at the highs. Look for an undershoot at the highs to get short, okay? It may just blow right through it. I'm going to err on the side of buying first. Once I see these buyers start to fail, I'll then look for the sells. So we go up, we sell it short, right, on the failure. Okay, that's one way to do it. Or we pull back, we buy it, okay? So buying here, buying there. But what I'm looking for is if we do go up, and fail, targets at the 50s, targets at the 48.78, targets the 47.38. All right, guys? If we stay bullish, we've got targets overhead. If we reverse and go bearish, we've got targets waiting below. All right? Nice and easy there on the crude. And then last but not least here, on the price action chart, crude showing strength to the buy side, a lot of strength to the buy side there. We don't need any volume on that one. We saw the volume in the last chart, though, looking a little bit tuckered. But this price action, though, looks quite strong to that upside right now. Don't forget the spike in channel. There's my target. If we get a bloodbath tomorrow, you got some easy targets waiting for you. 50.25, 47.52. Honestly, though, I just don't. My gut tells me we got a couple more days here of the bulls being in control right now. So what I'm looking at is I'm buying lows, I'm buying lows, I'm buying lows until I see what? I see the buyers try and fail. The minute I see them try and fail is the minute I know this party's over to the upside. Deal? Okay, remember, don't try to predict the downside. Let the buyers hang themselves first and use that as your confirmation to get short, right? We call this, of course, your buyers failing, okay? If we do go higher here, though, don't forget the measured move. Again, I would think we go higher tomorrow, but I'll be watching to see if my buys start to fail. And we're looking at 54.96 for that measured move target. All right, guys, so you got buy zones here. You got buy zones here on the way down. Look for the buyers to come in. If they can't keep it going, look out below. Target, target, target. All right, guys? Start with the long newsletter here for you this evening. Don't forget, you can download all of today's charts right below that video here. Download the charts, grab your free pass, register for the nightly newsletter, and if you happen to have some free time here, don't forget to share this information with a friend. They'll thank you for it. While you're here at SchoolOfTrade.com, don't forget we offer the best free trial in the business. And don't take my word for it, I will prove it to you. We're going to learn more on my free trial than you paid thousands of dollars for in that last horrible chat room you were in. Okay? We got beginner, we got intermediate, and we get advanced membership levels, and we always have someone standing by here 24/7, 365 to give you guys help if you need it. Hope you guys had a great weekend. Thanks for coming back and joining me again. My name is Joseph. Have yourself a great evening. Shall we do it again tomorrow? Same time, same place? You got it. You got it. Be well out there and be on the right side of the market. Come out and see me tomorrow, 8 a.m. Eastern Time. We open up our live trade room. Adios, amigos. Bye-bye for now.